Hello everyone. I'm Andy Colthorpe, editor of Energy Storage News here at Solar Media. And a warm welcome to our webinar with Honeywell Process Solutions, which is about how technology-driven solutions can de-risk and monetize your energy storage assets. Now, this is really a key issue for the industry at this stage of its development. If you're a regular reader of our site, Energy Storage News, you know that energy storage can help balance the grid through power applications like frequency regulation, and you probably know that energy storage can help integrate renewable energy sources on the grid and provide capacity to reduce the peaks that can be so expensive as well as polluting to deal with. You probably know also that investment is coming into the sector like never before, and you're probably aware that big players from the energy, technology, and engineering sectors and new entrants and startups from all around the world are making their mark. Energy storage, based on advanced technologies like lithium-ion batteries, can play a crucial role in energy systems that are reliable, efficient, affordable, and of course low carbon and based around increasing shares of renewable energy and reducing our global reliance on fossil fuels. In many territories, the wave of energy storage deployment has already been underway for some time. In many others, it's just beginning, but you probably already know that. What you might not know is how to overcome some of the challenges facing this rapidly maturing industry. And in many ways, the big challenges, as with so much in life, are economical. And many of the solutions, although not all of them, are technical. Although energy storage offers an extremely broad and rich set of values, tapping into that value and making your project bankable is often a different challenge altogether. For example, it's still not that easy to get financing for a battery project in many parts of the world, and the region we're looking at today, Europe, the Middle East, and Africa, is an extremely varied market. If your energy storage assets can respond quickly or even proactively to changes in market conditions, then you have very good opportunities ahead of you. If you can get strong assurances from the service providers you work with, then you have a very strong case of making those opportunities work out in the long term. Now, this webinar is primarily aimed at helping solve these challenges for investors, developers, and commercial and industrial facilities, helping you to secure financing, ensure the financial and operational key performance indicators are met over the project lifecycle, and much, much more. So we'll be hearing today how you can take practical steps to meet your sustainability and business goals with energy storage, and learn about some of the keys to unlocking the full potential of this most versatile class of energy assets. Today's speakers are Uzum Yasir and Vineet Shah with Honeywell Process Solutions, and together they have more than 20 years of combined experience in the energy and renewable sectors, and they'll be talking about how technology can help solve some of the biggest challenges facing the global energy transition through energy storage. Vineet and Uzum will be explaining more specifically what some of the main challenges are today and what they will most likely be in the future. And together, they will take us through the comprehensive solutions that Honeywell can offer to take on those challenges. These solutions are based on state-of-the-art and continuously evolving technologies, and Honeywell also puts in place crucial bankable performance guarantees that help you de-risk your assets over their entire lifetime. Now, in this industry, we are privileged to be at the cutting edge of a global energy transition. But the world needs to know that the new paradigms of the energy sector, based on distributed clean energy and controlled digitally, can be more efficient, more reliable, and economical. And that's what we're here to discuss today. We will also be saving some time at the end of the presentations to answer your questions, and I may ask a few of my own. You can put your questions into the portal on the right-hand side of your screen. So, without further ado, over to you, Vineet.
Hey, thank you, Andy. Can you hear me okay?
Yep, no problems at all.
Perfect. So I guess thanks for that great intro. We'll dive straight into today's agenda. So maybe, yeah, just a quick bio about me. So I've been in and around the energy industry in different capacities, and also have been very lucky to be involved on the technology side of things for almost all kinds of power generation, coal, nuclear, so all the traditional thermal power, nuclear, renewables, so on and so forth. Without diving into my background, what I wanted to actually touch on just on this slide is, I like to do this, is, last year we all have been through a lot of challenges, professionally and personally. So I guess as we go about our daily and professional careers, we tend to forget some soft things in life. So I just wanted to underline again that it's important for us to be compassionate with others, and just keep reminding ourselves, right, that as we go along our day, how are we making someone else's life better. And then with that, just one thing that really drives me personally is curiosity. I'm very passionately curious. So this, I always keep this quote on my wall, actually, said by Albert Einstein, that I have no special talents, I'm only passionately curious. So I try to stay as curious as possible. So thanks for that. Azum, maybe you want to do a...
Yeah, thanks, Vineet. So just a quick bio on me. I've been involved in the renewable space for over a decade now, involved in different sectors from offshore wind farms, including AC connected wind farms, and also HVDC connected wind farms. And then I've also been involved in a lot of the HVDC interconnector projects between, at the time, UK, Germany, UK, Denmark, and some other applications. And then it's really the last 6 years where I've been focused on the distributed energy sector, looking at how technology can really help shape what the future networks will look like, with a combination of technologies from storage, microgrids, digitalization technologies, all of that piece. And I think, similar to Vineet, I think what keeps me going is innovation. So I've been involved in 4 major technology changes over the last decade, and it's really, being at the forefront of these evolutions is really quite exciting. And there's a quote from Muhammad Ali, who's one of my idols. We should have in the back of our mind, we're actually working towards a deadline. And the challenging thing is climate change. We don't actually know exactly when that deadline is. So don't count the days, make the days count for you. Thanks. So I'm just going to go over the high-level agenda. So we'll give you a quick overview of Honeywell, what we do, and some of the interesting stuff that we're doing within sustainability itself, outside of what we're talking about today. We'll go over some market trends. So I'm sure everybody watching this webinar will be well aware of this, but we just want to kind of set the tone of where we're taking this. And then myself and Vineet will really go through energy performance contracts, how these can really de-risk and make your projects more bankable, and then ending off with a summary. So Vineet, over to you. Sorry, Vineet, you might be on mute.
This, even though we have been doing this for 2 years. So yes, so probably depending on which country you are in and where you're from, you might have heard about Honeywell in different capacities. So Honeywell as a name might not be new, but just to give you an idea where my group, which is the Renewables and Distributed Assets, sits. So Honeywell as a whole, we are majorly divided into 4 major groups, if you want to call them. Aerospace and defense, performance materials and technologies, safety and productivity solutions, and building technologies. So we are part of performance materials technologies, where we have a lot of process technology that automates and helps the different process industries globally run the operations more safely and efficiently. And we also do a lot of research under this group around materials and so on and so forth. So we represent a little over a quarter of the company. And then within PMT, we have a subgroup called STS, which is Sustainable Technology Solutions. And Azum, if you want to go to the next slide. Yeah, so in the sustainable technology solutions, what we have done is we have combined all the Honeywell technology that directly or indirectly positively impacts the carbon footprint of our customers and the planet as a whole under one umbrella called Sustainable Technology Solutions. So under this umbrella, we have things like all the technologies that go into buildings, right? And how to make the building more sustainable through monitoring, through HVAC efficiency, so on and so forth. Hydrogen is, again, this is a new and emerging space, but Honeywell has already been playing in this hydrogen value chain in different capacities. So this is also one space that we are actively looking into growing. Then we also have a group where we own a lot of technology around advanced plastic recycling. So we like pyrolysis of plastic. So we have the process technology around that as well. Then on the top left is renewable fuel. So this is where we work with a lot of, let's say, downstream refiners to convert their hydrocarbon-based refining process into renewable feedstock. So we have a lot of process technology around that as well. And then we have a CO2 emission reduction portfolio, which is basically a platform that can help you track all the emissions reductions, all the carbon footprint reductions, and the efficiencies that you have improved using the above aforementioned technologies in a single pane of glass. Now, last but not the least, which is where Azum and I sit, is the Renewable Energy Group. And in this group, we have a major focus on battery energy storage and energy storage in general, and then energy management software platforms. And we'll go over the technology stack later, but basically in this, we focus on everything related to the electric grid side of things. And we have all the technology on how to manage the grid more efficiently and how to help the more renewable integration into the grid under this group. So with that, Azum, if you want to go to the next slide. Yeah, over to you, Azum, for the trends.
Thanks, Vinny. So just want to quickly go through some of the trends which are really driving the need for energy storage and digitalization types of technologies. So, the big one is obviously there is a climate emergency. Urgent action is needed to prevent a climate disaster. We're seeing a number of governments, in Europe and globally, committing to net zero targets, and a lot of them are now starting to put this into policies as well, which is really a great step. And, from the behind the meter space, you have a lot of the large corporations really signing up to very strict net zero targets, which they need to achieve. So all of this will increase the pressure on other parties within these organizations as well. So, as an example, the UK alone has increased their renewables penetration to almost 40%. So if you look at it back over 15 years where it was, almost zero, they've almost got to 40% in 15 years. And there's plans to add a further 40 gigawatts of wind by 2030, I think over 10 gigawatts of solar. And a lot of other countries within Europe are looking at similar figures of implementation. So Spain, Portugal are looking at similar figures, Italy, and some of the other countries as well. And, the further demand for clean energy will be driven by decarbonisation of transport and heat sectors. So, Vinny kind of mentioned hydrogen. Hydrogen will likely play a part, but, a lot of the demand from these sectors will come onto the grid. How do we manage this, especially when the majority of the energy source is going to have to be, renewable sources or some form of clean energy source? This means one thing. So the more renewable energy you put onto the grid, the greater the need for the flexibility is. So the increased amount of renewables and decreasing the amount of synchronous machines on the grid is essentially going to be playing a big part. And a lot of the utilities, not just in the UK, but spread across the EMEA region, they're really looking at alternative models for procuring this flexibility. So gone are the days of the utilities, building out capex intensive projects. with storage, a service model has proved very effective within the UK. It's proved very effective for the end users. They get in a very cost-effective solution, and so we're starting to see other markets within Europe following a similar model as well. There's been great technology advancements. So I started in the battery storage space back in 2015 now. And if you compare the cost of what a system would cost in 2015, nobody would be investing in this space. So there's been great advancements in this space. The cost of batteries has fallen significantly. Lithium-ion batteries has fallen significantly over the past 10 years. Making it really possible to deploy these technologies at scale. We're starting to see a lot of alternatives to lithium ions coming into fruition. And a lot of these will start to gain traction, especially as longer duration solutions start to gain more market share, especially as a lot of the markets which are looking to increase a lot more of their renewables penetration, they're going to have to start energy shifting some of their energy sources. Software is really the key to unlocking real value and flexibility from the assets. So, you can put these assets in the ground, but without software which is really unlocking what these systems can do, and also future-proofing what these systems can do, not just today, but also in the future, is really key. And reliability and resiliency is really key as well. So just in 2020 alone, there's been 3 major blackout events: Europe, Texas, and Mexico. And with the changes in the climate, this will likely increase unless we start really deploying more of the flexibility solutions which we need on our grid. Sophisticated controls and remote operations is really the key thing, and we're going to go through what we do in this space in a little bit more detail. So Vineet, over to you to please go over the first 4 points.
Yeah, hey, Azum, thanks. So Azum went over the trends, right, that we are seeing in the market. So, and the trends are obviously driven by a few things: is the regulations, what the people want of different countries, which drive the regulations, and also whether the technology is financially viable and the projects are financially viable for the investments to flow in. So we, as Honeywell and in general, we see that there are a few challenges that this industry faces. And this is very typical for any new industry, right? As the industry goes from a new breakthrough initiative, if you will, towards a mature industry, these challenges are typical for any other markets that we have seen as well, right? So first, and you will see a common theme throughout the challenges that we'll speak to is like, first, there is a whole focus on CapEx and how to reduce the CapEx cost as much as possible. And then once you get to a certain maturity level, then you start seeing the industry seeing problems on operations side, and they see, well, now we are having challenges with the operations. So then the next batch of projects that come along, they focus on the overall life cycle of the project instead of CapEx only. So this is where I think the storage space is right now. So right now, we feel that bankability is definitely a key challenge, especially for investors. If you are a bank or a debt provider, as a developer to raise debt or as a bank to invest in a project, bankability is key. And there are a lot of companies, which is a great thing, that are trying to come up with newer technology. But how do you make sure that the project is backed by a solid company all the way from CapEx to the life cycle of the project? And is the project going to work on the execution side as well as on the operation side? So bankability is a key challenge, and I think that's one thing that the industry needs to address. Second is microgrids, and again, this is very probably region specific as well. Again, depending on which region from EMEA you are in Africa, let's say, or Eastern Europe, or which are part of Europe, you will have different focus on microgrid side, right? But as in general, as a whole, United Nations has defined the Sustainable Development Goal, where you need energy access to everybody by 2030. So what this is resulting in is, obviously, depending on the countries again and the maturity of the infrastructure of transmission and distribution infrastructure, it might make more sense for certain regions to get into the microgrid space where you're not connected to the main grid and you're really implementing microgrids. Now, that comes with its own challenges when you're trying to run your own grid. And that's where you, again, need a very sophisticated software, sophisticated energy storage, and an asset management to ensure that whatever the goals of the microgrid are, whether it's reducing carbon footprint or reliability of the microgrid or reducing the cost of the electricity, whatever the goals are, that they are attained. So, I mean, from the challenges standpoint, what we are trying to underline in general is why is there, based on these challenges, why is there really a need for digitalization and energy storage as the grid becomes more and more modern, right? The third challenge we are seeing is performance. Now, again, like I said, when any new market develops, the full focus is on CapEx and reducing CapEx costs, and you're getting subsidies based on that as well. But as you move along, we are already seeing some countries do this. The subsidies, as an example, are based on performance. Same thing is now investors are asking the same thing, is we're going to invest based on the potential performance or the performa of this project. So now when you look at performance, the focus shifts from CapEx only to CapEx plus OpEx on the cost side, and on the revenue side, how are we going to make the money? So that's where the technology piece comes in, like how reliable your technology is, how are you going to maintain it, how are you going to upgrade it, everything, right? So performance, like that, the focus now is going to shift and is already shifting from just CapEx only to actually performance side of things on the and how are you going to monetize the asset. Same thing is LCOS. Again, with LCOS, we have seen this in solar and wind as an example, right? I mean, all the other industries, the traditional ones, thermal power, pulp and paper refining, they all have been through the same transition. And most recent point in case, since we're talking renewable energy, is solar and wind, right? So if you remember when the solar and wind boom happened, it was all about how to buy, like how can we reduce the cost of the solar panels? How can we reduce the cost of the wind turbines? But then now if you talk with major operators of wind assets and solar assets globally who have ran these plants for 6-7 years, now the problems are coming along and they are seeing that, okay, our original assumption on the LCOE or LCOS that we had on a piece of paper on day 0 is very different from the real cost in year 6, right? So now things are coming up where, okay, the levelized cost of electricity, which was assumed on day 0, is actually a bit different than what it is going to be starting year 6 and 7. You might have just one more outage than what you had predicted on the wind farm, or you might have some loss of data. I mean, there could be a lot of things out where the operational costs can go up, which can do two things. It can increase your levelized cost of electricity from operation standpoint, but also it reduces your revenue, potential revenue. So shifting the focus a little bit from just CapEx only to really the levelized cost or the total cost of ownership, CapEx and OpEx over the term of the project, whether it's 15, 20, 25 years, that's very important. And that's another challenge I think this industry needs to resolve. Azum, anything you want to add, or you want to take us through the rest one?
Yeah, thanks, Vinny. No, I think you covered the first 4 points very well. I'm just going to finish up on this slide going through the next 4 points. So, subsidy free. So we're starting to see a lot more renewable projects becoming subsidy free. And this starts to born on a challenge for the end users as to, well, previously, we were being paid subsidies from the government, so you were pretty much guaranteed a return on whatever your project was. In a subsidy-free environment, that becomes a challenge, and so energy storage becomes quite a key topic to ensure your revenues are stabilized. And also, when you really look at what curtailments are doing on the network, curtailments is essentially harming the goal towards net zero. So in the UK, it's a practice which we have to do because of balancing supply and demand, or it could be just the constraints on the network itself. And if you think about what you're actually doing, you're actually displacing the energy that you are producing from these renewable energy sources you're actually shutting those plants down to give headroom to traditional generation. And so, that's why I really say this harms our goal towards net zero. And so, energy storage here in this topic can really play part of it. And to emphasize, how bullish we are as a business on co-location and long duration systems in general, we are actually developing our own long duration battery systems as well. So Vineet will go over in a little bit further down the line. We obviously have solutions around lithium-ion technology, but we are developing our own technology for long duration markets specifically. Revenue streams. So, as we know, revenue streams are, and stacking the revenue streams is really key, especially when you're starting to look at some of the markets moving towards a merchant risk model. And, operation of BESS assets is really key to ensure that your project returns are met or exceeded. The emerging C&I space, so, we're speaking to, as a business ourselves, we work with a lot of the large industrials out there, and they all really have very similar challenges. It's around reducing the electricity costs, reducing their emissions, but also for certain sites, it's around improving power quality, especially for sites where the power supply is really critical. And so when you're talking to industrial users, pretty much all of them, power, energy in general is really critical to their operations. So having a sophisticated software platform to support complex applications between different energy sources that might be on some of these industry players' sites, this becomes a key opportunity as well. And the last one is really around local jobs and training. So we're seeing a lot of opportunities where the customers are requesting local content and production requirements to boost jobs in that local area. But the challenge becomes as well, a lot of these new markets, they typically don't have the necessary workforce to actually provide a lot of the content which we need. And so, Honeywell has been doing this, over 50 years in the different markets we're playing in. So competency management and remote monitoring is really key to ensure high system uptime. So that's, some of the key aspects which we believe in this space are some of the challenges which we're seeing. And, the key takeaway here is energy storage and digitalization is really the key to enable the modern grid. So I'm just going to go over this slide. So this is really setting up the next piece of, why Honeywell. So, I'll start with looking at the graphic down below, first of all. So what we're essentially showing here is, there's developers now who aren't just operating in certain countries. They want to be developing opportunities across EMEA, as an example, or even globally. And so, having local engineering teams where these systems are being installed and having these assets managed under a single platform really becomes quite attractive. And supporting these specific projects by energy performance contracts, and we'll touch on that in the next few slides where Vineet will go through that in a bit more detail. But this really helps make these projects bankable as you pass these through to the remote operations center, where based on the different markets, how you're going to be operating these assets will obviously vary country by country, but this is something which Honeywell is doing today. So if we go back to some of the key topics above, as a business, we are technology agnostic, so we really select the right technology for the right application. So we're not pinned by just our portfolio. We can really pick the best technology which will be right for the customer solution. Energy performance contracts, so again, help support key KPIs which de-risk cash flow and make the projects more bankable. As I said, Vineet's going to touch on that in a little bit later on. I mentioned this just before, but long duration battery energy storage systems, so we are developing our own solution, which will be a bit of a game changer in the market. And as more information becomes available on that, we will be sure to share that with the wider audience. Local presence, as I mentioned before, deployment and maintenance supported by local engineers and backed by global experts is really the model which we're utilizing here. it's really the key way to get scale in a number of different countries where we're operating. Our Experion Energy platform is essentially a software as a service platform. It's designed for future advancements, so it's designed for what we can do today, but also what will be available in the future to essentially ensure you don't end up with a stranded asset. There'd be nothing worse than investing, a couple $1 million into a project, and then later down the line, new applications come online and you're not able to take advantage of it. It just doesn't seem right. So we really think about this, of how we can achieve this within our software platform itself. And again, trading operations, this is really the key. This is, without this, it's essentially a very expensive paperweight which you bought, or a very large paperweight you bought. So providing a route to market to monetize these battery assets is really key, and that's something Honeywell is doing. And Vineet will go through an example project which we're working on today. So Vineet, can you please go over our end-to-end offering, please?
Yeah, thanks, Azum. So, the previous,
Sorry, Vinny, and Azum. Could we maybe just do a couple of quick questions from me at this point? Like, I thought it might be a nice way to...
Sure. Let's do that.
Cool. Yep. Okay. Awesome. So so there's a few of the things that we kind of went through, some of those major challenges. I guess one thing that's really interesting, especially when you're talking about the long term, OPEX versus CAPEX kind of considerations. So particularly with lithium-ion batteries themselves, there's potentially an understanding that equipment will need to be augmented and perhaps some of the cells replaced over time, and maybe even replaced with some other technology, be it a better technology other than lithium-ion or just different lithium-ion cells. So in terms of that consideration, I don't know if this is a silly question, but when you're deploying a storage system, do customers have to think about that sort of augmentation cost? Is that kind of a function of CAPEX, or is that more to do with the operational cost? And how should people really think about that, do you think?
Yeah.
Do you want to take that one?
Sure.
Yeah, you go.
No, that's a very valid question. And I wish I had a crystal ball and gave you like one solid answer that applies to everybody. But in last year and a half or so, we have seen different approaches from different developers and financiers, and it really depends on multiple things. It depends on a few things. One is the technology side of things, technology and operations, and then one is the finance side of things, right? So on the finance side, obviously it depends on how the subsidies are structured in your country, and how you get subsidized. Let's say if there are subsidies, are they investment subsidies or are they production subsidies, right? This can really dictate a lot of times whether you want to spend the money up front or spend the money as you go, right? It also depends, again, depending on the country and how you have set up your special purpose vehicle for the project, how much percentage of debt you're raising versus equity, right? So again, then it will also impact how much cash flow is important for you versus upfront spend. So that is the finance side of thing around this. But then from the technology side, and of course, with the right technology, the financial model becomes more bankable. So that's the tie to the technology and the finance. But purely from the technology side of things, you can really do it either ways. You can either, keeping the finance side of things aside, you can either oversize the batteries a lot and let them degrade such that you are, in your performance models, you are getting certain minimum threshold of energy year over year until the end of the project. So you know that how much energy will be available on an annual basis, and you can structure PPAs or trading schedules, so on and so forth accordingly. Or you can augment as you go. And again, there are pros and cons to both, because if you oversize and then let the batteries degrade, the pro is that you don't have to worry about what future technology might be there, whether it will integrate well with the current batteries or not, right? So you're just using the same batteries, you're managing them. But the downside is you're paying for it up front, and you might not be able to take advantage of a newer and better and more efficient technology that might come along, let's say 5 years from now, right? Now, the flip side, the augmentation strategy, that works as well. So the con for the first approach is actually the pro for the second approach, right? So you can take advantage of future cost reductions on the batteries. You can take advantage of future technology upgrades. Now, this is where it's very key for you guys, for anybody, like an investor or developer, partner with a true technology company and a bankable technology company, let's say like Honeywell, because you don't want to be in a situation in the augmentation strategy where you have a battery asset, but then the future augmentations or future changes in technology are not integrating well with the current technology. So you need to be able to have that migration or upgrade very smooth so that your project is not a stranded asset at that point. But you can really take advantage of that changes as they come along and the drop in the price. The flip side, of course, is what if that integration doesn't work well? And that's why you need to partner with a good technology company. Does that answer?
Right, yeah. No, definitely. And I think that's the intersection of where, you know, finance and technology meet can actually be really interesting, I think. And yeah, I mean, it's something I'm really keen to know more about. And I'm not sure you will actually necessarily tell me too much more at this stage, because from what you've said, it's fairly early in terms of the commercial launch. But so you've got a long duration technology under development, and perhaps I'll leave it to our the viewers, to ask any more really in-depth questions. But I guess what that really says, rather than firstly, I guess I'll ask if you can tell us more about the technologies, but I guess the fact that Honeywell is working on it, and so are a number of other really large players in engineering, Lockheed Martin being one, I guess, that people will have heard of, shows that while the market today is really based around short to medium duration lithium-ion battery storage, you guys do see that coming future with long duration, I guess?
Definitely, Andy. So unfortunately, we can't go into too much detail on what that solution actually looks like. It's still, ongoing. But the market will have to move to long duration. It's simple. You can just look at it. You can see where the market's really moving towards, capturing a lot of the energy from wind, solar, whatever it might be, CSP plants. It's really going to be key to enable a future grid. So you can just look at what's happening, especially when you start looking at some of these net zero targets, which a lot of these countries have. There's no way to do that without long duration systems. Now, lithium-ion technology is great. It's really good for power type applications, and even multiple hour solutions. It's really valid for that. But the challenge with them is, when you start looking at really big systems, degradation becomes a really key thing, a key aspect. Safety starts to become a consideration, especially when you start to look at some of the really hot countries. Looking at Middle East, Spain, Portugal, Israel, countries in Africa. There are some concerns around how they would operate, and Honeywell has a separate way of how we manage that as well. But there are a number of advantages to long duration battery storage systems, which I can't probably go into too much detail right now. So hopefully, when that information is available, we can go through that.
Yeah, it's really.
Mind if I may add to that?
Sure.
So actually, I tend to agree with Zoom. And one thing I would like to underline, though, is, as Honeywell, the kind of global reach that we have and the technology company that we are, we believe that there will be a good mix, and a good mix is important. There will be a good mix of short duration storage and a long duration storage, right? So that's why when we go to the next slides, you will see that we are doing a lot of system integration on the lithium-ion side, but then we are also doing a lot of R&D on the longer duration. We are also in the hydrogen space as well, because that's another thing. Like, okay, what do you do with access renewable energy? Do you actually store it longer duration, or do you actually convert it to, let's say, hydrogen or power to anything, right? So we are looking at, and the answer to this is not a simple, yes, this technology works best for everything. it will depend so much, again, on the country you are in, the infrastructure that's already available, the local regulations, the subsidies, the technology advancements. So as Honeywell, we are looking at all of these technologies, and we might end up doing, focusing on different technology in different regions of the world. But we understand that a mix of technology is really important for us to get to that global mandate for the climate change, right? And I think that's what we are doing, is we are making sure that we are enabling all the projects of different using different technologies.
Absolutely, absolutely, cool. Well, yeah, I look forward to hearing more about that, over time, I guess. And I guess one more quick question for now on some of those challenges at the moment, and I guess this speaks to one of the trends, Azim, that you just mentioned, being that the development of route to market options, I guess, in some markets within the EMEA region that we're talking about today, like the UK. I think we recently heard at our Energy Storage Summit that there's quite a developed space for that route to market provision, but I'd expect that varies a lot depending on which market you're in across that whole region. And obviously it depends on the sort of regulatory regimes, the potential subsidies available, potential revenue streams. I mean, are there some other kind of key trends across that EMEA region that you see panning out over the next few years, where you think that kind of the route to market space is going to resemble something like what's in the UK today? Or what's your sort of general take on that, I guess?
Yeah, no, it's a good question, Andy. And I think, when you look at some of the other markets which are starting to develop, the UK market has really proven out that you can deploy battery storage at scale as a service, but there needs to be revenue streams behind that. Yeah. If these other countries, so we're seeing similar things in Italy now, with Turner doing a similar approach. At the moment, it's one or two revenue stacks. If you got the contract, it's attractive enough to deploy. If you didn't, there's no real incentive to do anything about it. So I see a lot of these countries where the UK was probably 6 years ago, when we came out with EFR, and that was like the first kind of catalyst point where there was a rush to the market to figure out how we can actually deploy this technology and how we can actually make money from it. So I'd imagine a lot of these other countries are likely going to follow a similar fashion, where we're doing a project in the Ukraine at the moment, and right now there's no real market for battery storage systems, but we're working with them to develop what that would potentially look like as well. So I can see this model being not everywhere. Some countries might want to, the utilities might want to own the storage assets themselves and deploy it like any sort of transformer or switchgear as a tool in their toolbox. I think a lot of the countries within Europe, especially, they're really going to be moving towards a service model. And so, to come back to your point, having a player who can actually operate these assets, not just in one country or two countries, but across the globe, really becomes quite an attractive term, especially when you're evaluating various aspects of these projects. Yeah.
Excellent. Okay, I guess that covers it for now. So I'll just melt back into the background, and guys, if you want to carry on with your presentation, I'm sorry for interrupting. Yeah, let's go for it. No
worries. Thanks for the questions. So Vinny, would you like to go over the end-to-end offerings from what we've discussed?
Sure. Yeah, absolutely. And I think thanks, Andy, for the questions, because that's a good segue into the slide. So this is just to give you guys an overview of the end-to-end technology stack that we have as Honeywell, right? And just to underline how much focus we have on the energy storage space, and why, that we really think it's important for the energy transition that we are going through. So as Honeywell, we have from technology standpoint, we have all the relevant technology, right? On the storage side, we have lithium-ion based batteries that we are deploying globally right now, fully integrated containerized solutions. We can do the integration in-house, or we can work with our partner ecosystem to do the integration. Again, depends on the application, the location of the project, so on and so forth. And then on the non-lithium longer duration side, we already touched on it, that we are working on our own long duration product. But as you start like going up, and which is where the value add is, the true value add is, and I think Azum mentioned the word paperweight, which was very interesting, because you can buy batteries, and spend millions of dollars on batteries, but if you don't actually operate them properly at the right time, it's really an expensive paperweight, right? It doesn't have the smarts. So as you start going up on how to manage the health of the batteries using the BMS or the efficiency of the batteries, and then if you further go up, safety is key. And for Honeywell, safety is always the prime thing for any projects we do globally. It doesn't matter what industry we are in. So we are very focused on safety. All our battery systems, obviously, we make sure that we are predicting, let's say, off-gas detection, or we have fire suppression systems, so on and so forth. In fact, a lot of third-party system integrators use Honeywell safety system in their battery integration as well. So that kind of tells you that we are very focused on safety for any projects that we do. And then, of course, we do the whole containerization and the HVAC and making sure that the battery has the optimum environment to operate in. And then we can also, like I said, because we can deploy the equipment turnkey, we also work with a lot of our inverter partners to integrate their product with our product and give you a full containerized or a building type battery energy storage system integrated with the inverters and the PCS. Now, as you go beyond the on-site hardware, and this is where the smarts and the analytics come in. So Honeywell traditionally is one of the industry leaders in SCADA, right? We have a very rich history there. We have globally so many process plants operate using Honeywell SCADA. So we are taking all that experience and all the technology and using it to control the battery storage assets, right? So we have a very robust SCADA solution. We focus a lot on communications, upgrades, cybersecurity patches, so on and so forth. So we have our own SCADA, which is Experion. Now that can be deployed either on site or in cloud, so all the technology is available. Then we also have a Honeywell Force platform that is an asset management platform for managing the KPIs of the asset. And then we can also do fleet management, right? So if you're an operator with multiple assets, either within a country or within multiple countries or globally, we can help you managing the fleet as a whole. And of course, we understand that different assets will have different revenue streams and different use cases. So we can help you stitch the whole story as an enterprise together and help you track and monitor your business KPIs as a whole. And then, of course, on the top layer, we have aggregation capabilities as well, so which is the virtual power plant. And then depending on the markets in the region, we work with a lot of route to market providers who are integrated with our VPP platform and can help us monetize the battery asset in the market, in wholesale markets if they are available. So from technology standpoint, we have all the hardware, the software, the services, security, cyber, as well as physical safety, all of that available, right? Now, where it really starts getting interesting, and which really we feel that really differentiates Honeywell, is the energy performance contract, which is on the top center you're seeing. So what we really do is we don't only just give you a product or a software with some warranties or guarantees on the product or software side, but we actually really try to sit down with you guys, understand your business KPIs on revenue, cost, and risk side of things, work with you what KPIs are important that can drive the profitability and the safety and the lower risk of your project, as well as multiple projects over your enterprise. And then we will identify those KPIs and we will perform against those KPIs as Honeywell. And we are more than happy to be measured against the performance of those business KPIs rather than, hey, I gave you a battery and does it work or not as per the guarantees and warranty I give you. This program goes beyond that and says, okay, these are the business KPIs that we agreed on the cost, revenue, and risk side. Is this Honeywell program helping us achieve those business KPIs? And we get measured against those on an annual basis or however we agree on. And we ensure that the project is meeting those KPIs over the 10, 15, 20 year, which whatever the life cycle of the project is. And this is what we call the energy performance contract. And the reason we can offer this is two things. One, we have already done these kind of programs in other industries for decades. So we have a lot of experience in delivering these performance contracts on multi-billion-dollar assets sometimes. And number two is, since we have the full technology stack all the way from level 0 on the ground to your cloud-based aggregation services or fleet management services, we understand what can be the potential failure points in this whole system. And the failure points are not necessarily that seem obvious, right? I mean, a lot of times you don't see an asset failing just like, hey, the batteries failed to work. It could be as simple as you lost communication. It could be as simple as the guy who was operating the plants wasn't trained enough. Or it could be as complicated as the batteries are degrading more, or there is some safety issue, so on and so forth, right? So there can be multiple failure points in the whole operation and the technology stack. And since we have the ownership of the entire technology stack in a project or over multiple projects, we feel quite comfortable doing this energy performance contracts. So again, the key takeaway here is energy performance contracts can really help you drive profitably, and it really goes beyond just having a good product, right? It really makes Honeywell your business partner, and we drive the business KPIs for next 10, 15, 20 years. Next slide, Izzy. So this is just peeling one layer off the message I said before. On the left-hand side, you're seeing all the different things we can do, right? All the different technologies that we have, all the different use cases we can use the batteries for. Depends on whether you're in front of the meter or behind the meter. We can help you either do demand management or reduce your carbon footprint. Or if you're in front of the meter, we can help you improve the utilization factor of your plant or help you participate in the wholesale market. So all of that we can do. But again, the focus is, what is your business KPI that you're trying to track, right? And sometimes it's high level that, yeah, these are my revenue and cost KPIs, but then a lot of times it really boils down to, okay, if you're an asset management company, or if you are owner with multiple assets, how do you want to improve your operations? And things like cost savings, mean time between failures, or mean time to identify or contain an issue. All these KPIs become very important. Competency management, cybersecurity. These are all the different places where things can probably go south, right? So again, depends on what KPIs are important for the project. Whether, again, also how the project is making the revenue, right? Whether it's wholesale trading, and whether a PPA structure or a floor price is important, and or whether if you are getting paid for availability. So all those things come into play as we go through the business KPIs that are important, and we will build a program accordingly, and then we can deliver the program for long term. So again, the KPIs is our prime focus, and the technologies are an enabler, if you want to think of it that way. Zoom, next slide. So this is actually an interesting slide, right? Because it just summarizes, if you're an investor or a developer or an operator who owns multiple projects, and if you typically see any project has these 7 key major risks, right? Development risk, construction risk, revenue, technology, operational risk, regulatory, and currency risk, right? So some of these risks are beyond our control as a technology company, as Honeywell. Some of them are even beyond your control as a financier or a developer, right? But then there are a lot of risks that we can manage. And if you look at the slide, with the energy performance contract that Honeywell is delivering in this industry, we can really take or really share a huge amount of risk on the construction, revenue of the project, the technology of the project, and the operations of the project, right? Honeywell the energy performance contract can alleviate a lot of this risk from you as an investor and put it on Honeywell to a lot of degree with this program. So what this does though is at the end it makes these projects very bankable, right? Because if Honeywell as a bankable company is really backing a lot of these business KPIs for the project long term, you as an investor or you as an investor feel comfortable, and you as a developer can go to an investor and make them feel comfortable that, look, this project is really backed by this energy performance contract, which goes for next 10 or 15 years, and it's going to be backed by Honeywell.
Vinny, just to add one point to there. So thanks for that. I think one of the interesting aspects is that energy performance contracts really help make these projects more bankable, really help de-risk the operational profile for these types of projects. But what this actually translates to into a market by market basis changes. So that's why it's great. If you have some projects, depending on where they are, come talk to us, and we can really put together a program specifically for your market and specifically for your project to see what that really looks like. Yeah. So I'll just move to the next.
Yeah. Yeah. So this is a case study for one of the programs, the energy performance contracts that we are doing for a company called IPA Power. So IPA Power was previously known as NR Store CNI. And this is a lot of these details of this program are also publicly available. So if you Google Honeywell and NR Store, you will find a bunch of press releases and articles as well. But basically, this is a very good representation of our a version of our energy performance contract, right? So for example, what we are doing for IPA Power is really together with them, we will be deploying up to 300 megawatt, 600 megawatt hours of energy storage assets, both front of the meter and behind the meter in North America. Now, the first phase of this program is all focused on behind the meter in Ontario, Canada. And that will be 90 megawatt, 180 megawatt hours, right? So, which will be, majority of it will be, let's say, operational this year. So under this program, what we are really doing is we are helping NR Store with the end-to-end technology stack. So we are supplying the batteries. We have our software integrated with the batteries. We have Honeywell as a remote operations center out in Calgary that's going to control all these different assets. There are 20 or 30 different assets across Canada. So, and then we will be offering the business KPI guarantees, right, around peak prediction, around battery availability, around remote operation center availability. And I said pre-prediction because the use case, or the primary use case, I should say, in Ontario, Canada, is the avoidance of global adjustment cost. And Ontario ISO has a 5CP program where if you as an energy user end up using energy during high demand times on the grid, especially the top 5 peak hours on an annual basis, then there is a huge global adjustment cost that you have to pay. And these can be substantially, these can, depending on the size of the facility, can run into millions of dollars. So what we are helping IPA Power do, because IPA Power is a developer who also does energy storage as a service, they are able to, using our KPI program and the guarantees that we are giving, they are then confidently able to go to these end users and say, look, if we can come and install the batteries in your location, we can help you all these global costs that you're paying as global adjustment. And the reason IPA Power can confidently do this is because the entire technology stack and the business KPIs are taken care of by Honeywell for this program. So it's a very great partnership that we have with IPA Power, and this program is the initial phases of this program are already quite successful, and we look forward to seeing how this program runs for the next 10 years. But we are excited about this program, and I believe we are happy to do many of these globally. Yeah, So
yeah, sorry, Vinay. Yeah, just to kind of finish off. So if you remember the 8 challenges which we mentioned earlier on in the presentation, so we mentioned specific opportunities around these challenges for each of these points, and the message here is that Honeywell can actually help support you with all of these challenges. So working with Honeywell, we essentially convert these challenges into opportunities via Honeywell solutions. And essentially, the lower part is what it's really showing you is our energy performance contracts. Really, what that translates into is you attracting the investment you need to actually build out these projects and also operate these projects in a profit. Yeah, and so that's really the kind of key messages. Partnering with Honeywell, we're able to help convert challenges into opportunities via our solutions, and our energy performance contracts really help attract the investment you need to build out this project, but also de-risk from an operational perspective. Vinny, anything you want to add to that?
No, I think that's, thanks, Azum. I think that's a great wrap up. So maybe we'll turn it back to Andy for Q&A.
Thanks.
Great, thanks very much, and yeah, thanks everyone for listening and watching through the presentations. We have had a lot of questions coming in. We won't be able to deal with all of them, unfortunately, and I know most of you watching are busy, and time is obviously precious, but we'll see how many of them we can answer in the next few minutes. And of course, this session will be available on demand, and as someone's just asked, can we get the presenters' contact details? I'm sure Honeywell can get in touch with you all. Yeah. So let's get straight on to these questions. We've had a mixture of kind of let's say general market questions and kind of curious technology questions, and then also obviously some more direct questions onto what what Honeywell does itself and what you guys feel that you're bringing to the market, really. So yeah, let's go straight in with that. And I think one thing that you guys are really proud to be talking about is the performance guarantees that you do. And obviously, this being a public forum, we're not here to talk in great detail about the specifics of these contracts, but there are 2 quite interesting questions on these. And as I think both of you pointed out, the very presence of performance contracts kind of speaks to the investability and maturity of energy storage as an asset class. So I think there's some value in there. So Vessel Timmerman, thanks Vessel for your question, asks if Honeywell actually guarantees revenue streams even under declining electricity prices, or is it that Honeywell guarantees the performance of the battery asset? And at the same time, Marco Salvadori asks if the economic commitment is on actual performance under management as either electricity cost savings or monetization and revenue sharing. Can you elaborate? I don't know if it's fair to ask both those questions at the same time, but gentlemen, let's see if you can answer them both kind of at the same time. Who'd like to go first?
Yeah. Hi, Andy. So thanks for both these questions. Actually, these are very interesting questions, and they directly speak to the energy performance contract that we have. So to answer Vessel's question, does Honeywell actually guarantee the revenue stream, or does Honeywell guarantee the performance of the battery asset? And I think this is very much in line with what Marco is asking, is around the total cost of ownership. So I will address both of them in one answer, and let's see if I do justice to it. So the answer is both. So depending on the market and the revenue streams, we can look at the revenue streams we feel comfortable guaranteeing. It could take multiple different forms, like floor price or working with you on the PPA with the utility, so on and so forth. But then it also comes down to what is more important for you. Is it the cash flow of the project, the bottom line, or is it the top line revenue? And that will depend on how your project structure is, right? Your debt to equity ratio. So we work in different markets, either directly as Honeywell or through our route to market partners who are integrated with our Honeywell Experian platform to monetize the asset on the revenue side. But then we also look at the program overall on the revenue side as well as the operations and the cost side. So we want to make sure that, for example, that you're not cycling the batteries so much that the cost of cycling the batteries is more than actually the revenue you're making on the other hand, right? So we manage the marginal costs of those assets, and then we also manage the revenue side of that. And then depending on what is more important for you, whether it's the cash flow, whether it is the revenue or the top line revenue, we can agree on some revenue KPIs or the cost KPIs or some bottom line KPIs that we can drive on a project. So we look at the total cost of ownership, CapEx and OpEx, to address Marco's question, because a lot of time we get things like, hey, simple things like, what do we do about augmentation, which is one of the questions Andy asked, or extended warranties, or so on and so forth, right? How do you cost it, whether it's in the CapEx, whether it's in the OpEx? So we work with you on the total cost of ownership. We work with you on the revenue side. We work with you on the marginal cost side during operations. And then we will guarantee some KPIs around those on a project-specific basis. So for Marco and Vessel, if you guys have more detailed questions around this and particular projects you want to discuss with us, both Azum and I are available. We will share the contact information with all of you guys through our Honeywell team, marketing team, and looking forward to further discussion.
Great, okay. Thanks, Vineet. A bit more of a general question next then, I guess. So question here from Anthony Agib, who asked, would you consider the experience in Texas is a positive representation of a microgrid and the issues inherent with a microgrid? So I guess Anthony's referring here to the recent energy crisis that happened in Texas that caused blackouts. And Vineet, I believe you're actually based in Houston, so I guess it's fair to ask you. Now, I'm not 100% sure Anthony's question meaning in terms of positive representation of a microgrid. I'm not sure if he's talking about ERCOT, the Texas grid being a separate grid in itself, but I guess it's a nice way to talk about the role of energy storage in potentially preventing problems like that happening, and not only the energy crisis, but the energy price spikes. Guys, is that a fair question? And you fancy taking that one for us?
That's a very valid and timely question. But I saw Azum unmute himself. So Azum, do you have a comment on this, maybe?
Yeah, I think Vineet, you can go into the details, but what I wanted to say is calling Texas a microgrid is like calling the UK a microgrid. Just because there's little interconnection doesn't mean it's a microgrid. It's a collection of networks, and I think part of the confusion comes from the definition of a microgrid can be very loose. People can use the term quite loosely. From a Honeywell perspective, a microgrid needs to have a battery storage element and to further enhance that, a grid-forming battery storage element. Yeah. That's what really defines what a microgrid looks like. So Vineet, over to you to maybe some of the more details around Texas and what's going on.
Sure. No, this is a very apt question, and I guess this topic can go on for hours because everybody is scratching their heads, and there will be a lot of learnings that will come. We have been talking with, qualified scheduling entities, the government bodies, Honeywell experts. I mean, there's so much learning coming from this. We don't know how this is eventually going to impact the regulations in Texas. There are different opinions all across the board. There are so many people that are now coming out of the woodworks around against renewables. There are so many people talking about energy storage. So I think, again, it goes back to my initial comment during middle of the presentation. The way I see it is the energy mix is important. Now, there are a few things on ERCOT. I mean, calling Texas as a microgrid is a little bit of a stretch, but maybe it's not that bad way to represent, in the sense that Texas in itself is not very well connected with the rest of the country from infrastructure standpoint. So if you want to look at it from that perspective, sure, it's interesting, and you could have managed the grid a little bit better. You could have, these are all, I mean, hindsight is 20/20, right? what this will underline is, and we have already started seeing an influx of storage project requests. This will still underline the need of energy storage as a very important part of the energy mix. I'm not going to say that you need to go 100% renewable just because of this event. Again, there will be a lot of learnings. We don't know how the regulations will be impacted. There is so much talks about, okay, do you want to cap the retail pricing, not at $9,000, but maybe something lower, right? Or how do you want to look at the RRS revenue streams? So there's so much talks about how the revenue streams will be impacted, and we'll have to, I guess time will tell what changes come along, like weatherproofing of the infrastructure, so on and so forth. But one thing is definitely that's coming out, that storage has its role to play, and you will definitely see large-scale energy storage projects coming online in the coming years. Not as a result of this event, but they will be absolutely be fortified. The need of those projects will be fortified as a result of this event.
Sure, and we're certainly seeing lots of large-scale batteries for short-term balancing and power applications going on in Texas at the moment. And I think, Anthony, yeah, thanks very much for your question. I think it's a very valid question, but I guess probably where a little bit of the confusion comes from is that, when we hear microgrid, a lot of us around the industry tend to kind of think of basically a grid that's connected to a main grid but can be islanded from it. And I think, if anything, the ERCOT example showed that it couldn't successfully be islanded, and there's that saying, no man is an island, and I guess no large-scale jurisdiction with power electronics can go it alone, I suppose, if we're getting philosophical about it. All right, so so back to a completely different region, but one that we're kind of very much covering today. There's a question here from Taiwo Adenikan. Sorry if I've got your pronunciation of your name a bit wrong there, Taiwo. But he's talking about, is the energy storage solutions technology that you're talking about today applicable to Africa? And we're talking today about the EMEA region, and as a global industry writer, I tend to write a lot about the E part and maybe less so about the MEA part. Guys, do you want to just maybe talk us through a little bit on what sort of technology solutions would be appropriate to those regions?
Yeah, thanks, Andy. I'll go to that. So, what's happening in Europe and, let's say, North America and Australia, what we're seeing there is we're basically seeing large-scale solutions being deployed, and from the last, let's say, 5 years or so, it's really gone from conceptually, can we do this, to right, we can do this, and we can now do it at scale because of the, it's almost like a perfect storm now. The cost is coming down to the appropriate level. The government pressure is on. Everything's here now for us to be doing this at scale. And Africa is very much going to be part of that story. Africa is currently in a transitional point of perspective where they're in a position where they need to start decommissioning a lot of the coal and gas-fired plants and looking at more solar and wind types of forms of energy. We're starting to see that in South Africa now, where there was a recent auction run. I think it was concluded just a couple of days ago, where there's quite a large amount of solar plus storage being asked for as part of these auctions, and there was a number of winners. The type of technology which we can use in Africa is the same as where we can use anywhere else. So whether the choice of technology will really be decided by what the application is. So we're not here saying lithium-ion is the best for doing this, or long duration is better at this. It's going to be a combination of solutions which really partakes of what we need to do. And so Honeywell, being an agnostic player in this space, we are really looking at, well, what is the market driver? What is the right technology solution which is going to achieve the applications customers are looking for? Based on that, we select the right type of technology. And that could be, right now the hot technology is lithium-ion. This market is moving so quickly that in 5-10 years time it could be something completely different. We just don't know yet. Yeah, but we have a good understanding because we hopefully that answers the question that whatever we're doing in other parts of the world, that will be applicable to Africa and other parts of the world as well. Yeah.
Excellent, thanks. Vinny, can you just unmute to answer there as well?
Yeah, just maybe one comment again, depending on which country of Africa you are in. Just one of, this might be a minor trend that might change eventually, but one trend we are seeing in Africa is, of course, in the CNI space, right? For multiple reasons, you have the high energy consumers, or the factories, if you will, wanting a little bit more reliable power and less electricity costs. But then also from investor standpoint, a lot of the PPAs, depending on the country you are in, are not that seen as that bankable, unfortunately, by the investors. So that is why there's also a little bit more drive towards CNI, because these private corporations, if they have a PPA with them, or if they have a cost-saving sharing kind of model with the private companies, it's just a bit more bankable than those front-of-the-meter PPAs. And that's why we are also seeing a little bit of a trend in Africa, at least to begin with, on the CNI and microgrid side of things. But absolutely, from technology standpoint, battery energy storage, the same technology that we are using everywhere else in the world, definitely applies in Africa.
Right, okay, great. And so we had a lot of questions in that are quite specific on different, what your views are on sort of different battery technologies and what have you. And I'm not really sure that today is the forum for that. So there's a lot of discussion in the questions section about flow batteries versus lithium-ion batteries, and there's always going to be plenty of opportunity to discuss that as the the flow battery stuff gets towards commercialization. But one thing we haven't looked at so much is the technology aside from the hardware, so the software stuff. And Ellis Jackson asks, what are the kinds of future advancements being future-proofed by the Experian Energy platform that you guys mentioned you have? So I think that's one side of things. And then I guess this is probably going to be our last question for today, but Toma Vidanov asks if Honeywell has full trading capabilities in-house, or if you guys are working with an energy partner utility on this. So I guess there's an opportunity really to ask you where you see that kind of, the extra layers beyond the hardware, in terms of not only adding value, but also controlling and optimizing energy storage assets, I guess.
Vinny, do you want me to take the first one around future flexibility, and then you can
go ahead?
trading?
Yes,
yeah.
Absolutely.
So thank you for the question. Sorry, I didn't catch the person's name who asked that question. But sorry,
Ellis Jackson. Sorry.
Okay, thanks. So I think it's not just about designing today what we believe is going to be in the future. Obviously, we have a roadmap in place, what we see, where we see the trends are going, so we have a roadmap to achieve those trends. But the storage space is moving so dynamically, and the number of applications which are popping up are ever increasing. So we need to obviously stay on top as an industry. We need to keep a track of what are some of the requirements which are coming through a lot of the different utilities. So, for example, in Ireland, where they're asking for even faster forms of frequency response, once you start to gain high levels of renewable penetrations on your grid, that's going to become something which becomes more apparent. So looking at stuff like frequency response type services, where at the moment within the UK now, dynamic containment is a very much a very profitable, let's say, revenue stream. But the problem is it's undersubscribed. And the main reason it's undersubscribed is because the technology which has been installed today, it's not necessarily had the foresight to look at, well, if new things come online, how can I take advantage of that? So one of the key advantages with Honeywell is because we are managing, designing, operating, controlling our own software piece, we can build that into our platform. So as things arise, it's not a case of you need to rip and replace your hardware. It's more of a case of, okay, there's a software patch which we can upload wirelessly. That gets uploaded to the platform, and it's now able to take manage those parts of those new dynamic revenue streams which might come online. But it's also looking at the hardware perspective, so selecting the right hardware. So as the market starts to evolve, your hardware is future-proofed. And one example of that is grid forming. So most of the battery storage systems installed to date globally, most of these are actually current source inverters, which means they essentially rely on a grid signal, which they follow as part of that. Whereas in a case where we're moving towards a grid where renewables is primarily going to be our energy source, you really need a battery storage system which can actually be grid forming. So in case of those cases like you had in Texas, where there's large cascading effects or power outages, battery systems which are able to grid form could actually support the grid, and you would essentially get paid for that, whether it's a black start contract or however the utility wants to incentivize that. These are the types of things that Honeywell is building into our solutions today. The last thing we want is for our customers to invest in X amount of dollars into a technology piece, and then they're not able to stay on top of the changes within the market based on the revenue streams. They can't take advantage of that. So that's giving you some ideas of how we really look at this from only from a software play, but also from a hardware perspective as well.
Yeah. Hey, thanks, Azum. So, just because we are running out of time, I'll be quick on this one. So I like the pointed question around the Experion Elevate platform that we have. So just to give you an idea, it's a technology agnostic platform, and we do a great job as a company on integrating our technology platform with different systems, whether they're from different protocols, whether they use different protocols or different industry standards. We work the integration happen, because that's what we are. We have been doing that for 40, 50 years, integrating our SCADA and Forge platforms with different systems. So just to give you an example, we are already today able to talk with 5 to 6 different OEM batteries using our platform, right? We manage them and we run into challenges on integration, but we always overcome, and because that's our core strength as Honeywell, is the Experion Elevate platform that we have. And we obviously, it's future proof from the standpoint that we are obviously constantly looking, about, okay, what new technologies are coming up, what kind of battery management systems are coming up that we need to integrate with. So we are constantly in touch with these different OEMs and different software companies as well. And we have a very large pool of, I would call it OEM partners that integrate with our platform, whether they are inverter companies, whether they are battery management system companies, or whether they are system integrators. So from Experion Elevate platform, I think that's one of the exciting things, is we can integrate with whatever technology comes along, and we can build something very quickly. Now, there was one more question around this, which was one of the last questions. I'll touch on that as well. Have you developed automated dispatching solution capable to integrate with other grid SCADA systems? Right. So the answer is, depending on which region you are in, either we already have the integration available, or if not, then we can easily build one very quickly, right? So this is exactly, again, this is our core strength as Honeywell, is integrating with other SCADA systems, other software, and then managing and controlling the batteries. I think that's a very good question, Marcus. And I think if you have a real, let's say, a project or a location that you want to particularly discuss, please send us a separate note. Thank you, guys.
Terrific. Okay, well, there's been quite a few more questions come in, and lots of them are really good and interesting ones. I can talk about this stuff all day, and I love doing so, but I think I'm probably going to have to call it a day for now. So I'd just like to thank everybody who took part, especially those of you that asked questions. Many thanks to our 2 speakers today, to Azum and Vineet. And also, just maybe like to just mention at the end that I really liked Azum's quoting of Muhammad Ali earlier on. As he says, the deadline is rapidly approaching upon us in terms of decarbonisation. Energy storage is here. It can be investable, and it can work as an asset on the energy system. So don't count the days. Make the days count. And thank you very much for joining us today, everybody.
Thank you, Andy.
Thank you, everyone. Have a great day. Be safe.